Welcome, everybody, to our investor presentation and question and answer period. We're very excited to share this opportunity with you because, well, this is an opportunity that I can guarantee you've never seen before and an opportunity that just may change your life. And I know for sure that it will change the lives of hundreds, eventually thousands of people here in the Las Vegas community. And this opportunity won't be available very much longer. So talk a little bit about that. But before we begin, let me share with you a very important story. You see, a few short years ago on streets just like what you see on the screen right here, there was a guy who was trying to make a name for himself. He really, really wanted to make a difference in this world, but no matter what he tried, no matter how hard he worked, it seemed he just couldn't get it right. He tried several different things, but was failing over and over and over, and he just didn't know what to do. And life just kept beating him up, so to speak. He ended up going through a divorce. He eventually lost his job. He was depressed and despondent. And to escape, he tried chasing money and the things that money buys. And when that didn't go his way, he was eventually indulging in drugs and alcohol, which led him to a life of petty crimes to support that lifestyle. And we all know that that lifestyle gets you into trouble, and it always does. He cleaned himself up. He started changing his daily habits and the people that he hung around, and he got around some really, really good influences that, like I said, believed in him. And within a few years, he had created numerous multi-million dollar companies. He has helped hundreds of employees change their lives and the lives of their families for the better. He has also mentored and coached others to do exactly what he's done, and he's impacted thousands of lives in a positive way. He firmly believes that one person can change a family, one family can change a community, and one community can change a city. And that's now his mission. Now, I know you may not believe that this is a real person, or maybe this is some made up story, but I can tell you that the man in this story is me. You see, I sit here before you today because somebody believed in me and helped me change my life. And transformed lives, transform lives, ladies and gentlemen, right? So I'm inviting you to join me and my wife, Claudia, and our team and our family of investors that extends from the East Coast to the West Coast, from the Canadian border to the most southern tip of Texas, to be that somebody that invests in someone else as we continue to help change the lives of others with our vision and our mission at Three Keys Communities. Now, for those of you that don't know our story, that lower right-hand photo is my wife and I standing in front of the home, the first home that we bought 3 years to the day that I graduated our a 30-day drug rehabilitation center. That upper left-hand photo is one of the five auto repair shops, multi-million dollar operations that my wife and I owned and operated for just about 20 years. And that upper right-hand photo is us standing in front of our real estate investment company in Alpine, California, a suburb of San Diego. Now, we realized at one point in time that we finally said that one day that enough is enough. We were tired of living paycheck to paycheck. So we quit our jobs. We put that house we're standing in front of in that photo up for rent. We bought a business and moved 350 miles away to start chasing our dreams. And eventually we realized we had a high paying job. We didn't own a business, the business owned us, and we were done with having just that one source of income from which our our pay came from. And we started investing in real estate with the extra income that we had. And I can tell you the Lord has blessed that 100-fold since that decision. So that's what we're going to talk about a little bit. And I will tell you that with that being said, I'd like to introduce you to Three Keys Communities, a place to unlock new beginnings. This project that you're about to see represents all the core values of what Three Keys Community stands for, which is freedom, prosperity, and love. if you know that you are not where you want to be financially, or there's another level that you want to get to, then you're in the right place at the right time for the right reasons. Because here we go, ladies and gentlemen. This is investing with impact. So, three keys communities. Who are we? We're a private sector real estate operator, and we have housing solutions that are designed to provide a support for individuals affected by the justice system or confronting the urgent challenge of homelessness. We have 95 transitional living facility options and 185 independent housing options through a county program called LEAPS, which is Landlord Engagement and Property Services. And we're located in both downtown and North Las Vegas because this is what's a scattered portfolio. Okay. So with all that being said, before I go into the investment, this is our disclaimer page, which basically says past performance does not guarantee future performance. Please, I beg you, do your own due diligence on any investment that you're thinking to become a part of. So let's talk about our vision and let's talk about our plan. And I'm going to go ahead and hand this over to Miss Beth to go ahead and take it from here for a few slides and talk a little bit about our vision and our plan. Beth, will you take it from here for a minute?
Awesome. Thank you so much, Rob. And what an empowering place we come from, having somebody who is leading us and guiding us, who truly knows what so many people have gone through and the impact that we're able to make by creating this opportunity for you. So, a little bit about our vision and our plan. First, this comes from where our values are for the Three Keys projects. And it's Three Keys as communities targeting a critical yet underserved demographic. And this is people reentering society from incarceration or facing homelessness. So a lot of times this is going to include people getting aged out of the foster care system. This is a program that gives them shelter and housing. And it's not a handout. This program is designed to be a hand up because at Three Keys, we just don't find a way around these barriers. We're tearing them down to set individuals up for success. So our impact at Three Keys provides residents with transitional living, shared living homes, and independent living options where they can start to really develop their lease and their credibility to rent on their own. Again, it's all about a hand up and not a handout. These options allow the resident an opportunity to minimize living expenses while establishing a rental history and eventually living independently. Our structure enables us to utilize 233 units, but turn them into 332 rentable spaces, which in turn maximizes returns for you, the investor. Okay, so just a couple little quick hits on our business plan overview. The first side of our business plan is called what's called Clark County Funded Housing. This was a bond that was an initiative to get homelessness off the streets of Las Vegas. So of the 233 units, 185 of our units are positioned for utilizing that Clark County funded housing. The best part about this, though, is that these are guaranteed rents through that program. The occupancy right now list for this is 3,000 people long. So we obviously have a capacity to continually get those units filled. They are managed by their case managers. So this is not something we're doing. This is their outside sources assisting people who are part of this program, which is of no cost to us. But we are the house provider, right? So just think of they're renting from us, but they're going to have all the services they need. Those rents are ACH'd into our account at the beginning of the month. So we all know that the government was amazing sending out $300 checks every week. Well, they're also amazing at making sure that landlords keep people housed because ultimately that is part of this program. We have a generous $500 sign-on bonus with each 1-year lease that we take into the program. So if you're looking for a value add, how's that? $500 just for starting that lease and getting somebody into the program. And we're safeguarded with the investment because there's a $3,000 risk mitigation fund that is on top of the double security deposits that we received. And what this is it's shared housing and independent housing options for these people in the different Clark County programs. Investors benefit why? From double rents, while residents enjoy a shared experience where they know that they're loved, they're cared for, and they're safe. Okay, so what's our second part is the transitional living. So as they go through that first program, they'll go over to transitional living. And in this one, we have 38 units, which provides 95 beds. And it, again, the comprehensive case management services are available for all the tenants in this type of program. Again, not that we're funding, but that is government handled and managed. What this does is it creates community collaboration. So people who know that they're amongst other people and there's that commonality, it gives a great community. We have on-site house managers for immediate access and assistance for them. And what does this provide for us? It provides steady rental income for you. And there's approximately over 500 individuals in need currently of this type of transitional living options each and every month. So again, waiting lists minimize our vacancies. Sometimes some of these will be broken down as little as weekly payments. And as we all know, is a hotel more expensive or a house rental with a 1-year lease? So again, those weekly rent payments actually end up creating more moolah within the business plan. All right, we have shared rooms available, providing that double rental rate returns per unit. It's a supportive community for the residents, which collaborates to their success. It's all about that hand up, not that handout.
Yep.
Now, Tim, you can mute the awesome person. Or they can just join and listen in. The more the merrier, I say. Next, maximizing the returns for investors. This, you guys, is about social impact investing. It allows you to invest and contribute positively to a community and maximize your returns. Okay, this is a super exciting page just to show you guys the dynamics. So we've always heard that rents are a hedge against inflation. So in 2023, our fair market rents that we had in our underwriting was at 16%. And in 2023, we saw as high as 23% increases for the 2 bedrooms and a 17% increase for the 1 bedrooms. And why is this? Because there truly is a shortage of housing in the greater Las Vegas area. And that then drives the fair market pricing on these rental units. Our new rent should be coming out sometime either this month or the beginning of next. So again, that'll be really exciting to see how much higher the rents go. And they have consistently outpaced inflation a lot because of supply and demand. There's just not enough supply to keep up. So you can kind of see that graph below. We saw the bumps from 23 to 24, 1,046 up to 1,214, and they continue to rise. Okay, so just a quick synopsis. As Rob mentioned, it is a scattered portfolio. So 233 units are spanned across the greater Las Vegas area and only 5 minutes apart. We sit one full block behind the Stratosphere for about 149 units. Just 5 minutes away, we have the other 84 units. And obviously the proper clientele and the proper areas. Foster kids are more likely to be housed in our 84 unit area because churches and schools are in the area, and our 149 units are more likely to bring our prisoners that are coming out of incarceration that must have somewhere to live to come out of incarceration. Hence why the government pays that year lease to give them that hand up so that they can reintegrate into society. And all of this is done in this dynamic, robust economy, one of the fastest growing metropolitan areas in the United States, Las Vegas. So, really nice, stable income base, a really large gross domestic product. Just a really fantastic dynamite community to have a project within that is landlord friendly. So that is, it's just a gem what we have here. All right. So now let's talk about the money or moolah, right? So, Rob, I would love it if you wouldn't mind diving in for everybody about the investments and the financial overview, because at the end of the day, we love to help, but let's see how much money we can do and make helping others. All right, Rob.
Happy to do it. Great job, Beth. Thank you very much. So a
You're
little
welcome.
bit of a review for those of you that may be coming a little bit late. Well, this is a $28.2 million project. It's 233 units. It's 12 properties total. That scattered portfolio that Beth mentioned. It comes out to about 121,000 per door per unit. The loan balance, we have three different loans. It's a little bit of a extraordinary circumstance where we decided, since it was 12 different properties, we set it up in three different LLCs so that we could easily sell it to more than one buyer if we decide to do that, or we could refinance it with more than one lender or more than one loan. We currently have three loans that total $16.8 million. Ladies and gentlemen, we've already closed on this property. We're in heavy operations and implementation of the business plan. We are currently raising the additional funds that we need for the capital injection into the property. We'll talk about that in just a little bit. This gives you a little bit of an overview of what the two loans are, what the one loan is, and all of that, and what the different terms are. The total capital that we're raising is $15.9 million. We have a substantial amount of that already raised. We're just in the final amount of money that's needed for the injection into the property, as I mentioned. Breakdown of that is 11.3 is down payment. 2.3 of that is CapEx or capital expenditures. That's cash injection into the building itself. We'll talk about that. And then closing costs totaled about 1.4 million. This is a 10-year hold. However, our projections and assumptions have us giving back all the initial investment of you, our investors, at a refinancial or what we call a capital event in between years 4 and 5, so that you can stay in as an owner and have no more capital at risk from that point forward. So even though it's a 10-year hold, our goal is to have the capital back in your pocket, back in your bank accounts, working for you and other investments while you stay in as an owner of this investment. So brief review as we continue to review. 233 doors, $28.2 million, 12 properties. We've already closed on all of it. May 31st is when we close on the final tranche, final LLC. This is a 506c offering for accredited investors. However, we're also running that in conjunction with a crowd fund, which allows our non-accredited friends, relatives, and neighbors to be a part of this and to invest with as little as $5,000. You heard that right, $5,000. This is we have a third party property management firm with over with over 20 years of experience in the Las Vegas area, guys. And so we're very excited about that. We don't manage properties, we manage managers. In this case, we've even got a third party asset manager that will manage the manager and is managing the manager, has been for 9 months now, as we implement the business plan into the property. All of our residents, as Beth talked about, are funneled directly through Clark County via their rapid rehousing initiative. And guys, this is not a Section 8, although we do have some Section 8 tenants at the moment, and this is not a set it and forget it program. The rapid rehousing is a hand up, not a handout. Don't get me wrong, there are people that need those long-term programs. The people that have come into the rapid rehousing, they've been interviewed, and they are people that have shown themselves to be able to accept the resume skill training, the job training, job placement, and become active members of society once again. So that's what this is geared up for, not for long-term low income housing. We are going to be doing a cost segregation study. For those of you that can take advantage of that, you already know what that is. That is an opportunity to offset some eligible income and lower your tax basis. Occupancy is currently roughly somewhere around 92%, and it goes up a little bit, goes down a little bit, but that's where we're riding right now. And for those of you that don't already know, I know some of you on this call are already invested in this project. We will be having our investor education and networking event to invite all of you out to Vegas to walk the property, meet our property management company, meet our third party asset manager, meet us, meet each other, and we will be doing a speaker education day on top of that as well. We're going to have food, fun, prizes, and networking all on November 22nd. That is a Friday, and we specifically planned it for a Friday for a number of reasons. One of them is if you're going to fly out to Vegas, you might as well stay for the weekend and enjoy a show. So we tried to set it up to where people could come on that Friday, enjoy the education day, enjoy each other's company, and stay in town if they decided to do that and enjoy a show. But we take it very seriously, guys. We want to have our investors either A, become a more sophisticated limited partner, which is the term that it's used when you're investing in someone else's deals, mailbox money, or B, get them set up for becoming a general partner, a GP or a KP, key principal of their own deal, and put these networking events that we're going to be doing and educational throughout the life of this investment are a big, big part of that. So I know, let's talk about the income. This slide can look a little bit overwhelming, but I'm going to break it down for you so it's simple. And I will tell you that this deal provides all of our investors an opportunity to invest in this project. We have 5 different classes, and what that means is there's 5 different ways for you to be in this project, whether you want to invest 5,000 or 500,000. So let's break it down because there's really 2 separate classes here. One is for accredited investors, that's B1, B2, B3. And that means the Security Exchange Commission says that if you have a net worth of over $1 million, not including your personal residence, that's equity and real estate or other assets that you own, or household income above 300 if you're married, above 200 if you're single, you are what's considered an accredited investor. So as an accredited investor, we realize that there's different objectives for different investors. Everybody's in a different season of their investing. So class 1, B1, is for people that really don't care about back end equity. They just want to know that if I put my money in a project, I can get a monthly check of interest. We call them our interest only investors because that's what they want. And they want the security of having a monthly check, and they want to be first in line in what's called the waterfall, okay, or what they call the cash. The capital stack, if you will. So we set aside a few $1 million for those investors. We're giving a 12% return. We're going to do a monthly check. We already have. In fact, they've already received their first monthly check. They'll be getting their second one here shortly. And they will receive 8% while we hold their capital, while their money is involved in this project. The other 4% will accumulate and not compound, but accumulate until we have a capital event such as a refinance or a sale. It's going to be a refinance based upon our assumptions. They will get their 40% back, or their 4%, excuse me, their 4% and their initial investment, and they will exit the investment having made 12%. Our Class B2 investors, that is our investors that invest $500,000 and above. They will participate in the back end equity. It will be a 12% preferred return. It's a 70-30 split, which is very common for LP and GP to split at 70-30. They'll be second in the waterfall or capital stack right after B1. They will participate in the equity that's created at the refinance as well as the sale. We'll talk about that on another slide. And they're going to retain 100% for cash flow ownership, 75% ownership for back end equity. Guys, that turns out to be roughly about a 22% annualized average return. Very, very respectful. And I'll show you on another slide what that looks like. On B3, this is where most of our investors live, guys, and that $100,000 to $300,000 sweet spot is what they put in most investments when they put them in. This is still very respectable returns. It's an 8% preferred return. $50,000 is the minimum. Receive all the same benefits as our B2 investor with a 70-30 split next in the capital stack. Turns out to be roughly about a 20% annualized average return. And guys, those are very, very good returns. All of these categories are, but for our accredited investors. Next, we have our non-accredited friends, relatives, and neighbors, and which are through a crowd fund. It is also a $50,000 minimum investment. You will receive a 5% preferred return and all the same benefits as our accredited investor friends. And returns will be roughly about a 19.4% annualized average return. Still very, very respectable returns. And then last but not least is Class D2, which it does not have a preferred return, guys. And I'll show you on another slide, but this is not a cash flow play. This is a set it and forget it play. Because it's back end equity where you're going to make your money in this class. And it is still a 70-30 split with no pref. You're next in the capital stack, and it turns out to be roughly about a 16 to 17% annualized returns based upon what we feel is our very, very conservative projections. So that kind of gives you an overview. I put this slide in here because, and you see the highlighted areas for vacancy and concessions. Guys, we have set aside, even though we've got a 3,000 person waiting list, even though we're getting the rents once it's established, put into our account on the first of every month through an ACH automatic deposit. In other investments, we always will put a 13% minimum, 10% and 3%. I know some of you have been to underwriting school and they tell you put a 5% in there because the bank will give you a loan using a 5%. I don't think that's reality in a lot of areas of the country. I'm usually at a 10 on the one side and 3 to 5 on the other. We went 13% and we left it in there for the whole life of this investment, even though we've got the guaranteed renters and the guaranteed income, because we just wanted to leave one more margin of safety in our favor for anything that we had not taken into consideration when we underwrote this project. So there's that. Now let's break it down by category, by class, what it looks like for returns. I used $100,000 on this B1 accredited investor category. It is 50,000, but it's easier math if I use 100. So 8% return is $8,000 per year. That totals 40 grand. That $20,000 is the 4% that we remember. This is our interest only investors. We set aside 4% for them during the hold. They get their initial investment back and they will exit the investment having made 12% returns. This $60,000 here is what a 12 pref looks like when you put in $500,000. This is our B2 investors, $500,000 invested. Their 12 pref has 60 grand a year. It continues to grow. You can see in years 4 and 5, that's a total of 333 in cash flow in those first 5 years. That 91K represents their pro rata share of the refinance proceeds when we get there for a total of $425,000 in the first 5 years in cash flow. And then they'll receive their initial $500,000 back, stay in for cash flow. That 117 is the cash flow in years 6 through 10 with no money at risk. That 601 represents what we feel will be their share of the equity created for a total of 718 on the back end, guys. That is really, really respectable returns. And last but not least, rounding out our accredited investor categories, again, it's a $50,000 minimum investment. I used 100 for easy math, and you can see we didn't hit the A pref. in the first year, nor did we in the second year. But in year three, it was made up and it got some steam rolling for years 4 and 5. Still some great cash flow, 46K in those first 5 years. 18K is their share of the refinance proceeds for a total of 65K in those first 5 years. Receive their initial investment back, stay in for cash flow, that 23K, and back end equity, that 120K. Still very respectable returns. Now, let's hop over to our crowd fund. 50K is the minimum investment to receive a 5% preferred return. Our conservative assumptions do not have that class hitting 5% the first couple of years, but 5% is $2,500. It makes up for it in year three for year one and year four for year two. Does very well for cash flow throughout those 5 years. Nice check when we refinance. Total of 25K out of 50K in their first 5 years. Receive their initial investment back. Hang in there for cash flow in years 6 through 10 and get a nice check when we sell the property. Still very respectable returns as we previously talked about. And then again, last but certainly not least is our non no pref lower level investments. Well, I use $5,000, but if it's 10 or 20, you can double or triple these numbers. There's no cash flow until we hit year 4 or 5. Hopefully it's better than that, but I'd rather under promise and over deliver. Very low cash flow, nice check when we refinance. Still did good on 5 grand for cash flow in those first 5 years. Get your initial investment back, hang in there for cash flow in the second 5 years, and get a nice check when we refinance the property. That pretty much rounds out the classes. And I know I'm going very fast, guys. We're going to open it up for Q&A here in just a moment, but let's talk about the properties because we've talked about everything. We talked about the business plan. We talked about the I apologize, guys. We talked about the business plan. We talked about the vision of the company, and we talked about the overview. Let's talk about the property condition itself, guys. So, Nikki, I see that hand. We're going to answer questions at the end. If you could hold that thought, really appreciate that. Or you could put it, oh, or you could put it in the chat. There we go. Sorry about that, guys. I hit the wrong button. You can put the question in the chat. One of my team members can go ahead and get that answered for you, maybe before we get to the end. But guys, you can see along the side here, we got interior paint, remodeled bathrooms, vinyl plank flooring, new or upgraded appliances. Sometimes it's not always new, but sometimes it's upgraded, updated countertops, new kitchen hardware. That's been done in just about every one of these units already. The seller took some of these units right down to the studs because the way that he purchased them, they had to be to get certificates of occupancy. So he's had new electrical, new hot water heaters, new surrounds, and a lot of these. You can see in a couple of these photos, you can see the tile. They're not all tile. Some of them are fiberglass surrounds, but honestly, they are very, very nice properties. But we're going to need to do some interior upgrades throughout the 10 years that we own it. This is our renovations and repair budget. This is what we're raising the capital for, the remainder of the capital for. We've got interior upgrades that are going to add fans, add cabinets. Some of the units haven't been done, but will be done in the near future. Exterior painting, we've already begun. Got one building that just finished yesterday. That's the transitional living facility building. On-site rental office, which we've already built. I mean, remember, you're hopping into this investment at a very safe point if there were such a thing in any investment, because we've already acquired the property and implemented the business plan already in full operations mode, and a lot of this stuff has begun or is already done. So we'll do upgrading some electrical, some plumbing, some windows, the roofing, some security gate installation, installing new signs, operational reserves for the unknown because of the age of the property is north of $500,000. Because believe me, I do this on a daily basis. You want that type of insurance to make sure that nothing comes up that you aren't prepared for. And then the transitional living side where we're going to have people coming in and that is my partner, Nicole Capper's specialty and her wheelhouse. She has run, owned, operated, managed transitional living facilities, and that is phase 2 of our business plan. So that's the money that we're raising for this, for the capital injection into the building, into the facility. Now let's talk about the team. You saw me open with a little bit about my story, homeless, to homeowner, to multiple business owner, to church board member, to real estate investor. The Lord has changed my life beyond my wildest expectations, guys. I got my real estate education in 2007 through Robert Kiyosaki's Wealth Intelligence Academy, and then through RE Mentor with Dave Lindahl, who I consider one of the greatest of all time, still my mentor to this day. He's also Beth's and a number of people that are part of our team's mentor. And we were inducted into his schools, both of those schools, Hall of Fame, which really just means we did something with the education. We didn't just sit on it, we actually did something. But this is our portfolio. You can see the word sold next to some of these, means we've bought the property, executed the business plan, and exited with a profit. Every single one of these properties is at a different stage of the business plan, and very similar to the business plan that we just went over on this building. Talked about Nicole Capra, who is unable to make the call tonight, but I will tell you that's what she does is transitional living facilities. She's already acting as the director of ours and running it 100%. We've already engaged the employees we need to run the transitional living facility and almost to the point where we're opening our doors. We're expecting October the 15th. The licensing is done. Just got some few I's to dot and T's to cross, and we will be fully operational. Rounding out our original general partnership team is Hitomi Yasuda, our professional underwriter and financial coordinator. And then Mitch and his wife Cassandra are part of the construction team and behind the scenes admin. That is our original team. But I will tell you without a shadow of a doubt, to round out a dream team, it takes a lot of people to take down a $28.2 million project. Hans Seelinger has been a part of this team for quite some time, as well as Beth, Caleb Johnson, Rain, Mazio, Chloe, great friends of ours, and Kim Henry as well, part of Abracadabra Capital. Manny and Daniel Juarez, as well as Nick Glore, all round out our dream team for putting this project together. If you're here, you've likely been invited by either myself or some of the people that you just saw their slide. Kim is our third-party asset manager. That is Lighthouse Management Solutions. She has overseen thousands of units across the country. She's been involved as an owner, an asset manager, a property manager. She has taken properties that are in receivership from banks, turned them around. So she's gotten the low bottom feeder properties, turned them around and got them sellable for the banks to get their money back out of. That's what she does. She is managing our manager and overseeing the implementation of the business plan. And then Dave and Eileen Aspire, or Dave and Eileen Crete, excuse me, our Aspire Property or Realty Group. That's who runs our day-to-day operations. They fill the doors, they collect the rents, they enforce the rules, they deal with the caseworkers, they do it all. They've been doing it in Las Vegas area with these programs and this clientele for over 20 years. They are phenomenal, salt of the earth people, love working with them, and they are getting our properties turned around, guys. It is really, really cool. So we have been doing this presentation for a little bit, and we've developed some frequently asked questions, the same questions that have come up over and over and over again. And I'm going to turn this back over to Beth, if she's still there, to take over the frequently asked questions, if you don't mind, Miss Beth.
I would love to. Thank you, Rob. Such a dynamic project. So, how can you invest? You can invest with cash, your IRA, your solo 401k, universal life insurance policy, and or a combination of the above. And then what is your minimum investment? So, as Rob said, our best returns are at that $500,000 mark, but our better returns are also at that 50,000 plus mark. And amazingly, you can participate in this project even at $5,000 with better than average market returns. And I'm saying that because even our $5,000 slot outperforms the stock market. So really just a dynamic project. Where do you fit? What are you doing with $5,000 or 50,000 or 500,000? And what will it be for you in 10 years? Okay, so how much are the GPs investing into this project? And the GP is the general partner team. The management team is fully committed, and we're investing approximately 15% of that total equity. And the reason for that is because just like you, we believe we need to put our skin in the game right alongside of you as the investor. And you'll find most projects, the general partner team is only putting in anywhere from 5 to 10%. So as you can see, it's an extremely committed team that is on this project. And then another area where you're going to really see the support of this team is this a recourse or a non-recourse loan? So traditionally in commercial buildings, loans are non-recourse. Well, because of how this one is structured and the types of buildings that are part of our portfolio, and we went through a local credit union, our loans are recourse loans. So again, what this should tell you as an investor is the fact that us as general partners and key principals basically have put a stamp on this project, that we are fully committed to it in more ways than one, our own pocketbooks, right? And then what is the stability of your income? So your income is stable and robust, with rents backed by the government bonds that have already they've already passed the bond, they've already set the funds aside for these programs for 10 years. This arrangement ensures income with a solid hedge against inflation as market rates and inflation escalates over time. And then how much is collected for a new tenant? So I mentioned this before, and it's super exciting because we're getting that $500 sign-on bonus. We're getting 2 months rent and double security deposit. So again, all of these are really a dynamic way to bring a new tenant into the project. And remember, our tenants aren't staying with us for 10 years. They're staying for a year or two. So we're constantly doing that turn and bringing in new tenants, which is actually great for us because of that $500 sign-on bonus. And then why have you closed and we're still raising capital? Well, because this is a really big project with a lot of Mooo'la required for all the equity in it. And it is actually very typical on projects for us to close the project and then move on to finishing doing all the raise for all the capex or capital expenditures, like taking care of those roofs and painting the outsides. So this is actually super typical within this industry to see this. But I want you to keep in mind, the best time, honestly, to participate in one of these projects is after it's closed, because we love all of our investors, but a lot of our investors waited months to start to see a return. Day one, once you make your investment, day one, you're going to start making a return on your money because we are already active and cash flowing. And then will 3 keys current loans stay in place during the life of this opportunity? So again, our strategy is at that year 4 or 5 mark, we're refinancing, or we're doing a supplemental loan, which is kind of like an equity line of credit on your house. Because it has a good interest rate, we take out what's called a supplemental loan. So at years 4 and 5, we refinance the ones that have high interest rates. We get lower interest rates, which is better for all of us, right? And then we do a supplement on the other portion, which allows us to pay you, the investor, back your initial investment. And that whole concept that you get back your investment, but you continue to get returns for 10 years was literally what made me so excited about this project for you, the investor. That one was a no-brainer because the longer you can make a 20% return on your money, that is how the wealthy become wealthy. So super excited about all the opportunities that are here. So what do you do next? So step 1, you're going to review the offering, and then you're going to make your subscription. That's your commitment of how much you want to invest into yourself for your investment for your future. Third, you're going to wire your funds, and then you're able to actually track your investment through the portal that you've done your registration on. So again, all of us are here. I've invited a lot of you here this evening. I'm super excited. I've dropped a calendar link in the chat. You're welcome to hop on there. I will do a one-on-one with you, answer questions directly, see what best suits you as an investor. But let's remember, most importantly, what does 3 keys represent? It represents freedom, prosperity, and love. Thank you.
100%. 100%. Thank you, Beth. Excellent job.